Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if companies are really making smart moves or just hiding behind fancy words. Today we're digging into SLM Student Loan Trust 2003 DOL's latest report, and let's just say it's about student loans, but maybe not in the way you'd expect. This is a filing with the US Securities and Exchange Commission, which is like the government's watchdog for everything involving stocks, and how companies tell us about themselves. Basically, it's a way for companies to keep the public informed about important stuff. Our main subject here is the SLM Student Loan Trust 2003-1. Now, the name sounds like a company, but it's actually a trust that deals with student loans. Think of it as a pool of student loans that have been packaged up and sold to investors. The report tells us that the key event happened on September 3rd, 2025. This is the date when some important communication about these student loans was sent out. While SLM Student Loan Trust 2003-1 is the focus, it's managed or handled by other entities. Here we see Deutsche Bank Trust Company Americas mentioned as being involved in handling their affairs. Banks like Deutsche Bank often act as trustees or administrators for these kinds of trusts, managing the actual loans and payments. There's a phone number listed, but honestly, for our purposes today, trying to call them directly isn't really the point. We're more interested in the information they're sharing in this document. The main event they're reporting today falls under other events. This is where companies put information that's important but doesn't fit neatly into other categories. So on September 3rd, Navient Solutions, which is acting as the administrator for this trust, sent out a preliminary remarketing memorandum. That's a pretty fancy name. But what it really means is they sent out an early draft of a document to help sell or remarket certain types of a trust debt, specifically the SLM Student Loan Trust, 2003 Class A5C reset rate notes. These are like bonds that pay interest based on a changing rate. The reason for this memorandum is to get these specific notes. These are like loans that have been turned into securities, ready to be sold again in the market. Think of it like repackaging something to make it attractive to new buyers. The most interesting part and what this filing is really about are the tables included in this memorandum. These tables give us a snapshot of the actual student loans that make up this trust as of July 31st of that year. This is where we get a glimpse into the health of the loans themselves. This section is all about the exhibits, which are the supporting documents that come with the main report. In this case, the key exhibit is the data about the student loan pool. Exhibit 99.1 is the treasure trove, the tables detailing the student loan pool. This is the operational heart of the trust. What these tables show is the actual performance and makeup of the student loans held by SLM Student Loan Trust 2003 DOL. We're talking about a collection of loans made to students, and the trust is essentially collecting payments from these loans. The data here would likely include things like outstanding balances, interest rates, how many loans are being repaid on time, how many are late, and how many have defaulted. For a trust like this, the quality of the underlying student loans is everything. If the loans are performing well, meaning students are paying them back, then the trust can pay its investors. If a lot of students are struggling to pay, then the trust itself might have trouble. Think of it like owning a rental property. The property is great, but if most of your tenants stop paying rent, your income dries up and the property isn't worth as much. It's the same here with student loans. The filing doesn't give us the raw numbers from those tables directly in this report itself, but it confirms their existence and their purpose. What's crucial to understand is that the remarketing memorandum is for investors, and those tables are what investors would look at to decide if they want to buy these notes. They'd want to see if the student loans are a safe bet. This is why a snapshot as of July 31st is important. It gives a recent look at the health of these loans. If, for example, the tables showed a significant increase in loans that were overdue or had defaulted between previous reports and this one, that would be a huge red flag for investors. It would mean the underlying assets supporting these notes are weakening. The fact that they are remarketing these notes suggests they are trying to refinance or move these securities to new investors. This could be for various reasons, maybe to get better terms, to clean up the existing structure, or because the current investors are getting out. In the world of trusts that deal with loans like mortgages or student loans, transparency about the performance of those loans is key to investor confidence. The numbers in those tables would tell the story of how well students are managing their debt and, by extension, how reliable the income stream for the trust is. For instance, if a high percentage of loans were showing signs of distress, a savvy investor would see that as a risk. If, on the other hand, the vast majority of loans were being paid on time with no issues, that would be seen as a stable investment. This particular filing isn't about a public company's quarterly earnings in the traditional sense, but rather about the operational mechanics and the underlying assets of a financial trust specializing in student debt. The health of the SLM Student Loan Trust 2003-1 and therefore the success of any remarketing efforts is directly tied to the payment behavior of the students whose loans are within the trust. The fact that they're distributing this memorandum in September of 2025 with data as of July 31st means they're providing relatively current information to potential buyers of these notes. This is standard practice to ensure that investors have the most up-to-date picture of the investment's health. If we were to imagine what those tables might contain, we'd be looking for things like loan delinquency rates, default rates, the average remaining term of the loans, and the types of student loans included. A rising delinquency rate, even over a short period like from May to July, could signal emerging problems within the student borrower population managed by this trust. This is very much like looking at the performance of a pool of mortgages. If many homeowners start missing payments, the value of mortgage-backed securities tied to those loans goes down. Student loans operate on a similar principle. The reset rate notes part also tells us something. It means the interest being paid on these notes can change. This introduces a bit of complexity because the cost of borrowing or the return on investment can fluctuate. Investors in such notes would be carefully evaluating how these rate resets might impact the overall yield and risk profile. In essence, this filing is a crucial communication to the financial markets about the state of significant student loan assets. It underpins the process of selling or refinancing financial products that are backed by this student loan pool. The details within those tables are the real story, revealing the actual performance of the student debt that fuels this trust. Now, looking at this from a broader perspective, what does this tell us about the student loan market? It reinforces that these loans, even if bundled into trusts and sold as securities, are still fundamentally tied to the ability of individuals to manage their education-related debt. The success of entities like SLM Student Loan Trust 2003-1 and the ability of administrators like Navient Solutions to remarket their offerings hinges on a large number of students consistently meeting their repayment obligations. Any significant shifts in these repayment patterns, whether due to economic pressures on borrowers or changes in loan servicing, would have a direct impact on the financial instruments derived from these loans. This filing, by providing that data snapshot, serves as a vital indicator of that underlying loan health. So what's my take on all this? Essentially, this report is a factual update on the health of a portfolio of student loans. The crucial numbers are hidden in those tables, which reveal how well students are paying back their loans. If those numbers show a lot of late payments or defaults, it's bad news for the trust and investors. If students are paying on time, it's good news. The remarketing of these notes suggests that the trust is actively managing its financial structure, likely aiming for favourable terms or new capital. This kind of activity is standard in the securitization market, but always revolves around the core performance of the underlying assets, in this case, student debt. The key risk here is a widespread inability of student borrowers to repay, which would directly impact the trust's ability to fulfill its obligations. Alright, that's our decode of the SLM Student Loan Trust 2003-1 report. What's your take on the health of student loan-backed securities and what that means for the market? Drop your thoughts in the comments below. If this breakdown was helpful, please hit that like button. It really helps us keep these deep dives coming. And don't forget to subscribe for more corporate insights. We also have a Discord channel linked in the description where you can chat with us and other viewers. Thanks for watching and see you in the next decode.